Okay, let me intro everything. Welcome to the Ask Lex series today. Alerts are dead. Automate instead with PeakBot and their pro trading partners, Nick and Mike. They will introduce themselves a little bit later. Before I get the guys going, Dillon and Ben, a couple things. We will send out a poll today. It's very simple. It's 7 easy questions. We'd love for your input. It just helps us bring you these things and give the great content that we love to give you. Very simple things, not hard at all. So I'll start that afterwards. Secondly, down in the toolbar, there's a Q&A button. If you wouldn't mind hitting on that, and when you have a question anytime during the show, please ask. I think Dylan, Ben, myself will be watching for those questions. We will interrupt and ask those as needed. If not, we will get to them at the end of each presentation. Ben and Dylan, anything I missed before we let you guys get started?
No,
Let's do
man.
it.
I think you nailed it. Let's do it.
All right, have at it. Take it over, guys. Go to it.
Perfect. Well, Lex, thanks so much for having us. Just to kind of reintroduce ourselves here, my name is Dillon Del Rosso. I'm the co-founder of PeakBot. My co-host and co-founder is Ben. I'll let him introduce himself in just a second here. But for just a little bit of context, we're here, as Lex mentioned, to talk about how trade alerts are dead and we'd rather automate instead. So we're going to show you so many different ways you can get that done here tonight. PeakBot, for anybody who's not familiar, new to the scene, we are an automated trading platform for the everyday retail trader. And what we do is we have our own strategies as well as partner with professional traders in their communities to bring trusted automation with real results to you, the everyday trader. And we want to make it easy. The good news is Tradier has a big part in the whole let's make it easy thing. That's why we love working with them. And that's why we're hosting this with Tradier here this afternoon. So tonight, we're going to get into a number of different strategies and show you how these are fully automated for you. All you need to do is connect it to your broker. Of course, in this case, a Tradier account. And there's a number of different ways to automate: custom algorithms, automated alerts, and copy trading. These are a few of the things we'll be talking about here tonight, specifically around automated alerts and copy trading. So to get us started, we got about a 10 or 15 minute intro here. Probably won't go that full length before we hand it off to our first partner, who's been absolutely crushing it, Nick from Bull Trade Finder. But we'll get into that in just a second. So Ben, I see you are in control of the slides here. I can take over, or we can go. I can just kind of give you the nod, whatever you prefer.
Give me the nod. Let me feel like I'm doing something.
All right, come on. Here's the nod. Here's the nod for the next slide. So for those of you who've been around the block or have spoken to somebody on the PeakBot team, you've probably seen this slide or heard this statistic, but this is an alarming one, and it is true. And a lot of what we're covering here tonight is roots back to why we're here, why we automate our trades. The sad reality is that only 10% of retail traders are profitable on their own, right? Manually trading. And I truthfully think that number is even higher, probably more like 95%. That's just my opinion. The point is, retail traders struggling is unfortunately not a surprise to people. Why? Well, the system's a little bit broken for retail traders. Ben, we haven't said this in a while. You might know what I'm about to say, but the stock market's built for the everyday retail trader, but I don't know how it's built for the everyday person when it's open from 9:30 to 4, right, Eastern time. We're at work. We're busy. We have lives, so we're lacking the time. We lack a strategy, and we lack discipline, right? Generally speaking, emotions get in the way. Fear and greed is the main reason that most traders lose. So we want to eliminate all that, and luckily we've been able to do so. PeakBot's been in business automating for retail traders for over 6 years, and we've been partnering with great pro traders like Nick, like Mike, that we're going to talk with tonight for over the last 3 years. So what are we doing? We are providing automated trade technology. We're going to show you how this is 100% hands-free trade execution for you. Simply connect your broker, activate it with one of our partners. You determine what lead trader you want to follow. When they trade, you trade. When they enter, you enter. When they exit, you exit. We make it that simple, okay? Of course, You want to know what's going on under the engine or under the hood, right? We want to know how these strategies are working. All of our partners are fantastic educators in their own right, specifically around options with the partners we're talking to tonight. So anyway, we're giving you automated trade technology. We're giving you statistical based strategies, and we're keeping your emotions out of it. See, Ben, that was a good nod. And you also keeping me
I got to
on.
keep you moving along here, right? We said
Yeah.
15
Yeah. People
minutes
know
intro.
this.
If we
People
let you
know this.
talk, you're going to go 30 minutes.
Yeah. All right. Cool. Hey, glad we're keeping it moving. So we talked about this a little bit, but just to flex the muscle a little, PeakBot was one of the first fully automated platforms in this space. We founded the business in 2020, and well, we have not stopped. Luckily, we've seen a lot of growth in the platform, and we've learned a lot of lessons the hard way. And we're lucky to have really figured some things out over the last few years and partnered with great people. So we are secure brokerage integration. All right. So we are commercial developers with brokers like Tradier and other brokers that are not needed to be named here tonight. Not important. That's not the show. Okay. So Tradier, truthfully, not just saying this because we're hosting with them. There's a reason we're hosting with them. They're the cleanest. They got the best API. They're an API centric broker. And boy, do they route bot orders cleanly. And we love that. All right. We love a good, clean API. So that is our preferred broker. For more than just that, we know as options traders, these fees per trade do add up. Tradier with Tradier Pro and Pro Plus make that a lot less expensive than a lot of these other big name brokers. So we're going to get into a demo here, and then we're going to get started. So we're going to show you how incredibly simple this is to use for PeakBot and for any of our partners with their platforms and their own custom subscription and website. So anyway, all you got to do is connect your broker, select the trader and the strategy you want to follow, set your budget, and that's it. Set it and forget it, and your portfolio is going to be fully automated for you. Now, you can step in whenever you want, but the idea here is to remove the time needed and remove the emotions. So Ben, what I'm thinking is I can either take over the screen here in a second. There's probably one or two more slides, but I think maybe it would be helpful to kind of just get into a demo. Yeah.
Yeah, why don't we get into a demo and then I'll get the intro slide ready for Nick.
Excellent. So I'm going to share my screen, and it's really important to know, Ben, can you confirm that you can see my screen?
I can see your screen.
All right. So this is a PeakBot account. Now, please know that the setup, the dashboard here, whether you're in light mode or dark mode, is very similar for our partners. The domain is different. So it would be for Nick, who's going to be talking here in a minute, btf.peakbot.com, and we'll show you his site. But the front end is very similar. There's a couple little things where it gets different based on the trader and the strategy and the alert. But the idea here is you have your different strategies and or alerts over here on the left-hand side. You can click into these. As you can see, I'm trading one of our King AI bots, which has been doing really well as of late. But BenBot is going to be a strategy that, actually Ben covers here tonight, appropriately named, probably our only appropriately named bot. We're not great at naming bots, but we're great at building them and partnering with those who have great strategies. So if we wanted to, the first thing that you're able to do when you log in to any subscription you sign up for to automate your portfolio with PeakBot or our pro partners is you're going to be asked to connect to your broker. So once you get that prompt, you can come here and select Tradier and hit integrate. You're actually going to be brought to Tradier's screen. Okay, you're going to log in with your credentials and approve access for PeakBot to place the trades on your behalf. Once you hit approve, you'll be taken back to your PeakBot account and or your partner account to get started in the dashboard. So I'll just give the quick demo here on BenBot, since that's the one that Ben will be covering here tonight during his session after Nick and before Mike. So if we click activate here, we'll notice that a window pops up here to start automation. The great thing about PeakBot and the way it works for our partner platforms is it's incredibly simple to use. You just don't get this in this industry, okay? Algo trading is niche as it is and still relatively new to the retail trader over the last 10 to 15 years. But just in the last, call it 3 to 4 years, things have really started to roar in this industry, yet nobody's making it easy. We pride ourselves on that. So to start your automation, the bot is already selected. Most of our most of our strategies and partner strategies are only trading a handful of stocks. Okay. BenBot trades IWM. He'll get more into that. You can see how many units you can trade of this is the last step you need to do. Set your budget. Okay. So you can trade up to 4 units of BenBot on our standard subscription. We'll go over promotional price here tonight, and you'll see how much cash is needed per unit. Now, this changes for every strategy and every partner, but that'll let you know how much cash you need available in your account to get things started. So all I need to do here is click activate. This is a disclaimer that we are very upfront and transparent about. You are using a third-party platform to place the trades for you and have it executed in your broker. So you'll hit that, and now you'll notice that BenBot is now active and live in your account, and your job is done. Now, for this one, it has a couple heads up here just to say that this one's only exclusive to Tradier, and that your bot will day trade, and make sure you have enough cash available to make these day trades, although it tells you how much cash is actually being used. So setting up a bot is that simple after you connect your broker, and taking it off or pausing it is just as simple. You can click on the active button here, and it'll pop up your window here to pause it and or remove it. And again, you'll have a similar experience, maybe not exactly the same with our partner platforms, but the whole idea here is that the user experience is similar and simple. All right, so I can hit agree to remove there. That's just telling you, hey, if you're gonna remove anything while you're automating here, just be sure that you're not in the position. And it's okay if you are, but you're now manually responsible for any open positions if you're going to turn off the bot or the alert or the strategy that your partner is running, okay, or that your provider is running. So, Ben, I think that pretty much covers the demo. For us and our partners, results are tracked in-app as well as externally in Google Sheets, where every single trade is live and updated daily, something like you'll see here with BenBot. Ben, you guys can still see my screen appropriately, correct? Ben, maybe off camera, that's okay. Hopefully you guys can see my screen. So anyway, the point is all of the results are available. Yeah, I just wanted to get into that. So Ben, unless I missed anything, I will be handing things over to Nick here in just a second. Ben, anything I missed?
We have lost Ben.
We have lost Ben. Can you hear me? Oh, yeah.
Yep, you're good.
We got Lex, we got Nick, and I'll be frank with you all. That's all we need right now. Ben will figure his situation out, and technology's not always our best friend, but I see that he jumped out. He'll jump back in, and I'm sure we'll be just fine. But anyway, the show must go on. Nick, let me ask you a question. And actually, Lex, if there's any questions maybe that we should get to, quickly, feel free. Otherwise, we can get to them at the end. Whatever you think is best, Lex.
Yeah, let me tackle a couple of these first. I'm gonna come back on camera before you get started with Nick. So, a couple ones I've answered. We do get a lot of questions about Canadian residents and accounts at Tradier. Unfortunately, that's a no, and it has more to do with some governmental restrictions than just our desire to be there. Trust me, we would love to be in Canada, but it is very cost prohibitive to be there physically. Which is a requirement, by the way. One of the questions that you probably answer right off the bat for everyone is PeakBot free with Tradier? Is there any separate commissions involved? So I can answer some of that part of that question if you can answer the other part relative to PeakBot and free.
Yeah, absolutely. So we'll get more into that with Ben's presentation. We have a promotional price. PeakBot is not free, but what we do provide is 6 months of Tradier Pro for free if you sign up with our link. So that's saving you on commissions, but you will be getting a discounted special promotional price for us and all of our partners here tonight. Really quickly, Lex, I saw another one come through that I'll hit quickly. Fernando asked, is it options or shares? The answer is both. It is primarily options trading. Nick and Mike will both be presenting, and Ben will all be presenting on options trading strategies. However, shares and equities get mixed in. All right. Ben has a covered call strategy that he'll talk about tonight where you're buying shares daily and selling calls against it. So it can be both. We'll continue to answer questions in the Q&A. I want to make sure we get started here on time for Nick. So Nick, I'm going to hand it off to you. Do you want to be in control of the slides, my friend, or would you like me to be?
Honestly, if you want to do it, that would be perfectly fine.
Okay, sure. Let me do that. I'm going to pull up my screen here and you'll let me know if you can see it. And you just give me the nod as to when you want to click around, okay?
Yep, sounds good. Well, thank you, Dylan. Thank you, Lex. Thank you, Ben, whoever Ben is. Hope he's doing well. Um, yeah, so my name is Nicholas Giannati. I go under, well, everyone knows me online as Bullet Trade Finder. That's the company I founded. I've been trading for just over 10 years, started in junior year of high school. Um, and, you know, just like anyone else or anyone that became successful, I definitely got my ass handed to me when I first started trading, just to be blunt about it. I did have some lucky struts where, you could see there, I talked about how I turned 2,000 to 59,000 very early in my trading career, and I totally blew all that away. Um, then had to just basically build myself back together, find that mental state that really worked for me. And it didn't take that next time either. I destroyed my account again, and it was all about finding what works for me, being able to size appropriately, get everything. Best way to put it is trading is 90% mental. You go into trading and you see all these gains online of people posting that they made $10,000 on one trade or $20,000 on another trade. Everyone is in different financial situations. Everyone is at a different level in trading. Um, so where I'm kind of going with that is take everything a step at a time on where you are financially, where your mind can handle a certain position size. So when I started to become successful in trading, I started to size much smaller. I started to size more consistently and focused on compounding. So for me, that started with focusing on 200 to $300 days. And as time went on, that started to compound and compound and compound. And I just started to find strategy that worked for me. I started to see the market more clearly, starting to see price action really working out one way or the other. Started to see reversals happening before, they truly did happen. And for anyone that knows me, I'm a big like reversal trader. I focus a lot on that, mean reversion, probability statistics, support and resistance, stuff like that. Um, and that is what I excel at. That is what I found I excel at. So I stick to that. I work on that. And you are never going to be 100% profitable on every single trade you take. Anyone who says that is just, lying to you. But it's about being consistent with yourself, getting in that right mental mind state for trading, and just executing. So the strategy that I want to talk about today, which I've been teaching over and over again over the past couple of weeks and months, and now just about 2 to 3 years. And what I said for 2026 is I want to teach people spreads because this is a strategy that I consider as a second income, has totally changed my life, and I've seen it change others. I've met people in real life that I talk to online that have literally changed their lives on this who were down 6 figures and now are up 6 figures. And I'm not just saying that to say that. There is literally people I have met in person in real life from online who have done this. Um, and building connections with those people has been absolutely phenomenal. And to see that success and that turnaround is, very rewarding. So basically, let's kind of get into what credit spreads are. Um, Wait, before I go do that, any questions on that, or you want me to just keep going?
I'll see if any questions come
Okay.
through. There's a few that you can probably address. I'll let you get into it, and
Okay.
then I'll hit you with the questions as they come when I feel it might be appropriate without interrupting you. I just want to
Yeah,
make sure that you can still see my screen,
I
correct?
see everything. Yeah,
Okay,
you can
perfect.
put it here.
Okay,
Yeah,
cool.
I'll go over basics of spreads, and then I'll answer a couple questions, and I'll go on to the next one.
Excellent. Let me
Mm,
know if you need me to move the slide.
Yep, no worries. So yeah, everything. Well, not everything I do, but a lot of my success comes with spreads. Anyone who knows me, I trade a lot of NDX and QQQ spreads. What I focus on when I'm trading spreads, and I could use today as an example, it is kind of an outlier more so. Um, but in general, when I am trading spreads, again, kind of looking reversal, kind of looking mean reversion, I'm using probabilities, I'm using statistics. So, for example, when I'm trading, I usually trade same day spreads to also clarify.
Yep.
Um, we did a trade on NDX today. Now, again, today is kind of like an outlier, but this is a trade I have rarely ever lost on in the 6+ years I've been trading spreads. When the market gaps down or gaps up over 1.5 or 1%, I usually kind of sell a spread a few minutes into the market open. Um, Depending on if it was a gap down or gap up. So for today, it was a gap down of just about 1.5%. I think at some point we got just to about 2% on the day down. Um, but I was already so I sold a put spread. A put spread in this case is a bullish spread. I want price to stay above my sold contract. And in this case, I'll use Qs as an example because I did share a QQQ trade that I opened earlier today.
And if you want to take the screen or anything, feel free. Just let me know.
Yeah, I don't have anything at the moment to share
Yeah.
screen-wise, but I will. Yeah, I will if needed.
Yep.
So for example, I do a lot of NDX. I posted NDX trade that was literally 700, 800 points out of the money to the downside. I was able to collect $85 a contract in premium. Um, and on that alone today, I made over $1,500 just on that trade alone.
Man,
Now, for
that's
the conversion for people that want spreads, want QQQ and don't really want to trade NDX, we did the same thing. So we focused on, again, on a day that we're down, let's say 1 or 1.5%, I want to be able to sell just about that same amount, so 1.5 to 2% lower. And I'm looking for contracts at around a 95 percent probability of profit. You could look at this by either looking at that, for example, uh, Tradier and every other brokerage has delta, and you can see the delta of a specific contract. For that sold contract, you're looking for a delta, let's say under a 6, um, to kind of give you that probability of profit. So delta is out of 100 or 1, let's just say. If the delta is 6, it's just, well, a 0.06, sorry.
right, right.
1 minus 0.06, which gives you a 94% probability of profit. So for that, that's what I did this morning. I did that right out of the gate, 5 minutes after the open, and we had absolutely no worries on that trade, and it just closed, 100% profitable. Now, in a regular scenario, let's just say the market, opens flat or opens up 1 or 2%. Let's say we are rising, and I am going to pull up my screen here for a second.
Sure. I'll stop
I
mine.
sent you a request.
Okay, that may be on Lex if you're there as the
Okay.
host. Hopefully he can help you out with that.
Yeah,
Uh,
no worries.
all right.
If not, there's no worries.
Yep.
Okay.
You should be good, Nick.
Okay, let me try it again. Yep, there we go. Okay. So you can see all my disgusting lines. Let me just get rid of this. Make it nice
That
and
happens.
clean. Yep. Um, okay. So for example, uh again, today is probably not the best. Let me just go a couple of days prior. So we're looking at February 20, let's do February 26th. My apologies. And the reason why is I want to give you a clean example of what I specifically look at in a given day. So on February 26th, which we have right here, I sold put spreads. Now, you can see the market is in a pretty hard downtrend.
Mhm.
Um, from the open, we went from 25,300 all the way down to 24,820. So just about, let's say, 500 points. Okay. In that case, I am going to be looking for, oops, sorry. Let me just get to do. My apologies. My apologies.
Take
All
your
right.
time.
So in that case, I'm going to be looking for a mean reversion trade. Again, I'm a reversal trader. I don't really want to be selling spreads into a move. In this case, it just hasn't worked out for me. When I'm selling spreads into a move, and let's say I do a call credit spread, which is a bearish spread, it just really hasn't worked that great for me. So in this case, I sold 24,310 puts, and I know I'm talking about NDX. It's just what I do a lot of the
Yep.
time. And I bought 24,260 puts. So that is a $50 wide contract. And in this case, that was 500 points lower. So I had 500 points of safety or just over 1.5% on what we already had basically a 1.5 percent move to the downside there. Now probabilities of the market closing 2% or over, down and or up, is just under 7%. Closing 3% is like just under 3% or under 2%. I forgot the exact number, but it's right around there. So I'm using those probabilities to my advantage. I'm using the probabilities of the actual sold strikes to my advantage. And then I'm trying to find, an appropriate entry. I actually entered this at 1021. So I didn't get the bottom, and you are never going to be perfect in any trade you do. Okay. Well, hopefully, hopefully that does happen. But um, here is the 1020 to 1022 candle. So I was basically just about at the bottom, give or take 60 points after a 400 plus point move. Was coming into a support there. You started to see the candles after that just started to slow down. And it just turned into, the right opportunity at the right time. And those contracts literally went, I talked about it just about 40 minutes later. Those contracts literally were 50% plus in profit, right after that, after this big bounce right here. So again, pretty clean trade. It gave me the right opportunity. I had to wait, be patient, and, you know, execute at the appropriate time that I felt was appropriate. So let me kind of go into a couple of my rules, and then I'll go into a couple of questions as well.
Nick, really quick, if
Yeah.
you don't mind, because I realize that probably should have done this because
Yeah.
people want to know. I think we got to tease your results really quick.
Sure.
That's what I'm getting at. Because they're so damn good, let me just share my screen really quickly, and then I want you to get right back into this. But for everybody who's not fully aware, again, what Nick is showing you is how he's getting the results that he's getting. He wants to show you the engine, and he's going to. What I need you to see very quickly is this, okay? Since Nick was actually, I believe, our first copy trading partner when we did this the first go around. And Nick, I'm happy to say here today that even that first one, we had our ups and our downs, right? Like that, we had a couple bad trades, and I say we because we are a team, we are a unit, right? We're all on this. I'm on the trades with you. The point is, what a recovery has been made, and this is what happens. Like we're all, even professional traders are going to, have drawdowns. I saw a question that came in. Hey, I see there's drawdowns on these charts. Yeah, that happens. But look how they've been managed. Nick has been able since launch at the end of October, okay, 115 trades. And this is why you're here tonight. These are the trades that are automated. These are not Nick's. These are Nick's results, but these numbers are based on the average fill across all users who are copying Nick. Okay, so 105 trades winning out of 115. That's a 91.3% win rate. Using just 5K in cash, the total ROI in that time is nearly 100%, $4,382 using your 5K. Hey, the original 5K double your account challenge people, Nick, are getting ready to really celebrate. And look, that's a cash on cash. That's an 87.6% return. Okay. Nick is going to get back into his information here, but hang tight because you're going to get promotional pricing and a great price to get in to start copying Nick. So Nick, I'll hand it back to you, but I needed the people to know what you've been doing. Now show them the sauce.
No, yeah, keep this here for a second. No, put that back.
Pulling it back, coming back now. Here we go. Can you see it now?
For me, it says Dillon has started screen sharing, but it's not there.
Oh, come on. Anybody else seeing this? All right, hold on. Let me try one more time.
Okay.
What were you going to say, though?
I was just gonna bring up some points there.
All
Uh,
right. It's,
okay.
yes.
No, no, no. Okay.
Now try sharing the whole window, Dylan, not
Nothing's
just a
easy,
tab.
man. Hold on.
This is
I'm going
the
to share
if you
just
don't
the
get it this
window.
time,
All right, come
There
on.
we go. There we go. There we go. Okay.
Hand,
Yeah.
I'm going to keep my
So
hands right here.
yeah, what I wanted to go over here is, yeah. So since that drawdown at the middle to end of January to just about the beginning of February, so since that kind of dipped there right at the end, we're on a 32 win streak, and that's phenomenal.
Yeah.
You know, it's something that does not happen often, but you can see, the consistency there. And when I talk about spreads, the way I personally trade spreads is I'm not looking for home runs. I'm looking for consistent compounding. That's what I'm looking for when I specifically trade spreads. Um, and you can see based on a $5,000 account, these are base hits, but look at how they add up. I mean, in just 1 month, you would have made from 5,000, 25% there or 20% there, sorry.
Yep.
Um, and again, not saying that happens every month either, because it definitely doesn't. If we go to
Yeah.
January, yeah, look at January. And January was a pain in the ass, let me put it. So the at the end of January, I was coming on, well, I actually basically did make a record. January was the first time that I lost four spreads in a row, 4 days in a row.
Right.
Um, because at the end of January, I don't know if anyone remembers, but at around 12 to around 1 p.m. Eastern, um, on one of these days, we actually held it through a little bit, and you can see we won, which is probably the 28th.
Yep.
But on Trump was sending news literally midday, 4 days in a row when our trades were profitable.
Yeah.
And after we had to get stopped out of our, stop loss, um, all the trades every single day there, on the 29th and 30th, ended profitable. I mean, again, we stopped out, but I'm
Yep.
saying if we held, which I would not suggest, ended
Yeah.
fully profitable and more. It was crazy. And that put me on a
Like,
streak that that I haven't been on before. In my 6+ years of spreads trading, I lost four in a row. Again, on here, I did hold some of them where we had good entries and we didn't get above my stop loss.
yep.
But on my personal side, which is not shown here, I kind of jumped the gun a little bit on just a little bit of it. Um, Now, to
But
kind
yeah.
of go into just the basics of spreads trading. So let's kind of dive into that. Uh,
And
you
I
can
can
pull
either
up,
pull the slides back up or
yeah,
you
you can
can.
just pull up a slide. That's fine.
Okay, cool.
Um, yeah, so I just want to go over the basics, kind of make sure everyone kind of understands what spreads are and why I believe they're a strategy that is so underutilized and overlooked in just any market setting. So things I hear when I bring up spreads is they see lower profits, they see possibly higher risk. That's due to the collateral that is used. Um, so I personally never use I would never risk the whole collateral. One, I think that's stupid. Two, again, everything about trading is about uh, risk management. Without risk management, you're not going to be able to have money to commit another trade, execute another trade, and make it back. Um, so for me, I kind of just I hate seeing that being thrown around when, people say there's so much capital involved, there's little profit. But then you look at the results and you look at the actual scenarios of how many trades you could be in profit. For example, I mean, look at what was shown there. I'm hitting 91% in over 4 months of time. I've produced over 87% return. Um, and that's with conservative, trading. I'm not doing anything crazy. Um, it's just me trading, hitting my stop losses, as you can see on those dips, throughout the whole entire chart there. And I'm just moving on to the next trade. Um, I'm looking at the probabilities, I'm looking at the statistics, I'm using my knowledge of price action and trying to get into the best entry at the best strikes that I possibly can. Um, so again, let's actually really dive into it now. I know I said it 10 times now. A put spread is a bullish spread. So for example, if you believe Q's is going to stay above 590, let's say market's at 600 right now. If you believe Q's is going to stay, QQQ is going to stay above 590 today, and you want to sell a 590 put, and then you're going to buy, let's just say, a 589 put. Now, the difference in strikes of that is $1, difference in strikes from the 590 and the 589. So for that specific trade, you would need $100 per contract you want to, buy. $100 in collateral per contract. Now, let's say you sold the 590 put. Same thing. You want Qs to stay above 590, and you buy the 588 put. Now it's $2 wide in strikes, and that's going to be $200 per contract, um, for every contract you want to own. Now, the reason you may want to do this is, for example, the reason why you have to sell, one specific contract and buy another specific contract is because that is where you get your premium. The sold 590 put, let's say, has a $20 per contract premium, or 20 cents, and the 589 has 12 cents. 20 minus 12, you'll obviously make $8 per contract on the $100 that you would use in collateral, which would be an 8% return. Now, if you did the 590 and 588, again, it would be $200 collateral now, and instead of it's 20 minus the 12, let's say the 588 is 7 cents. So now it's $20 minus 7 cents. You'd make $13 per contract on a $200 collateral. It's just really, how you want to structure your trades. Now, same thing with the call side. Call side is a bear spread where let's say you want QQQs to stay below 610 now. So you would sell a 610 call and you'd buy a 612 call. Same scenario, as long as Q stays below 610, you'd make profit on the trade. And you could trade this like any other specific uh, trade you do. Let's say you just, you normally open just QQQ long calls or QQQ, long puts. You can get out of this spread at 20% profit, 50% profit, or you could sell it, for a 20% loss, 50% loss, whatever it is. Now, some kind of rules that I initiate, and then I'll go into questions here. I usually wait until 10:30. I wait for after um, an hour after the market opens, so 10:30 a.m. Eastern, to enter a trade. Reason why I do that is I wait until the market is kind of settled a little bit, see where the trend is going for the possible day after all the data is out in the morning at 8:30, 8:45, 9:45, and 10 o'clock, and then kind of go from there. And then that's where I kind of navigate where I'm trying to execute my trades, where I'm trying to be patient and get that opportunity for a possible reversal and or trend direction to execute a trade on that end. Um, let's see. Yeah, if you wanted to go to the sides and see if I missed anything, but I just wanted to give a little basic, scenario of what spreads are. You're muted, Dylan.
Oh no. Ben knew we weren't going to get through this without me doing that.
Every
Um,
time. Every time.
every time. Nick, I think you did a great job, and we got about 5 minutes, and we're going to move in, and we want to make sure we cover your promotional price and how people can get started. But here's what I did have left. Again, just a reminder as to how good this has been, and you can check his results at I believe it is peakbot.com/BTF results, and if that's not the case, I'll make sure we get that live in the chat. But we were just covering, and I love your base hit example, right? Like this was the biggest win in these fantastic compiled results, nearly 100% return in just a few months. The largest win was $220, right?
Mhm.
And the largest loss was $695. I mean, these
Yes.
are things that, and sorry, I don't know, the text gets a little weird at the bottom, but the point is, you're recovering. The rate of recovery is fast. And like you said, you get hot. The point is, professional traders like Nick, when the market can change very, very quickly. Okay. And an alert from a professional trader is fantastic. But if you're not able to be there and react and respond and enter the order cleanly and fast, you're late. All right. And so that's why we're sitting here saying alerts are dead. And Nick, I think, unless you had anything else, I think you covered pretty much everything. We had some more information on here as to how you identify some price levels, but I would say maybe just a big quick plug for you. And you're live on X often, correct?
Yeah, every single day.
On Twitter.
Every single day live. And Dylan, if you could actually go back to that loss one, I just want to do a quick tidbit.
Yeah.
So yeah, everything we do, everything I do is I base it off a 200% stop loss of the premium that I'm expected to return. In this case, this is our largest loss, and it was actually just a bit over the 200%. It was around 250 to 300. And the reason was on that day, we had news intraday that the market spiked like 200 points down in a matter of minutes. VIX was elevated, and obviously premiums were elevated within, a minute or two of a 200 point, dip there. So I had to execute it just a little bit over that stop. But normally, we're sitting right at that 200% stop, maybe just a little bit over it. But the reason why I do that 200% stop is I'm able to make that trade back within just about 3 trades. I should be in profit. And again, with the consistency of, you know, the probabilities I'm using regarding the trades that I'm taking, where I'm entering trades that are 90% plus probability, I win nine, let's say I win 9 out of 10, you know, I should be able to consistently compound that even with losses. And that's shown on my large accounts, which have over just about 2 years of data. That's shown over the 4 months of data that we have here. So I just wanted to give a little tidbit on that.
No, it's incredibly helpful. And I think, it's a testament to your consistency. Again, I think people just need to see, base hit, base hit, base hit. When a loss comes, I'm sure if we looked at the chart on these days when it's red, I know we feel the same way, Nick. Like these are nutty days. They're tariffs. We call them the terrifying trades a lot of the time, when you have no idea that these crazy things are coming from whoever it might be. But no, and it's really good. What I want to make sure people know is where to go to get started. All right. And that is here. Make sure you guys can see this. So to start copying BTF and be fully automated, all you got to do is head on over to peakbot.com/BTF99. That's going to take you to your checkout. Okay. Or you can just scan this QR code here. It's going to take you there. Now, if you want more information, maybe we put this in the chat. I'm not 100% sure, but sign up is btf.peakbot.com. That's for full pricing, okay? But you're going to want to go here and check this out. It's going to be $99 for the first month. It does renew at full price of $150. But if you love it and you get even a percentage of the returns that Nick's been able to collect for other traders, you can always upgrade to an annual subscription and save money there. But get started, $99 for your first month. All right. And yeah, fantastic job, Nick. We love having you as a partner. You've been a great friend of the program here for a long time. And just congrats on all your success here. And congrats to the traders following you. And hopefully if you're watching this, you understand that it's time to get on board, and all the results are tracked and updated live, daily, fully transparent, nowhere for us to hide here. All right. So we hold ourselves accountable, and when we win, we celebrate. And when we lose, we educate as to why. So Nick, thanks so much for joining us, man. And we'll keep this up on screen here for just another second. Make sure everybody can get the link and or the QR code. If you miss it and you want to get it, just ask us in the chat and we'll make sure you get everything you need. Okay?
Hey, Dillon, let me jump in. Sorry to interrupt. Before Nick leaves, let's rip through. Let's do a lightning round on questions here to knock some of these off, okay?
Yeah.
And they might not pertain to you, Nick. Just say move along and we'll move along. NDX, liquidity and slippage experience. What do you say about that?
Yeah, Nick.
You want me to answer that?
Yeah,
Yeah,
please.
Nick.
If,
Yeah.
if you have an answer, if you don't have an
Yeah,
answer,
no.
say
That
no,
is a
Lex.
good
I don't have an answer.
Yeah, that is a good question. And honestly, I think I finally cracked the code.
Okay.
Because we have had a few trades that have had some slippage on them, and I started to realize yesterday was one of them, by the way.
Yep.
Just transparent. There's no need to lie about anything. I started to realize that the lower premium, so let's say around the $50 premium range on NDX, where I'm trying to buy far out, and this was also later in the day too, at around 12:30.
Yep.
Again, a little more illiquid at that time. Premiums are lower, volume was lower on the contracts. We did see some slippage on that, but normally it is pretty clean. Like today, everyone got the same entry. Actually, even some got better entries than me. Someone got filled at 95 cents today, and my fill was at 85 cents. I did not see anyone get filled under 85 cents. But so let's just say 85 to 90% of the time, it is spot on with pricing and
Okay.
liquidity there.
Got it. Got it. And then this is kind of an interesting one. I think it's good for any of us. Do you close out the trades if it goes against you so you don't lose the full amount? So I guess some
Correct.
percentage. Okay, so there is some number that you get out of, and you might have already said it. And
Correct. That's the 200% stop loss of the premium that I was
okay,
expected to earn.
got it. All right, excellent. Let's grab another one. Any strategies involving futures?
Dylan,
Dylan,
I'm
you're on
on
mute.
mute. I'm on mute. I'm going to pay to a fine jar after this. That's coming next. I'm just trying to be
Okay.
respectful, and it shoots me in the foot. Uh, Nick, you dabble in futures?
I do, yes.
Yeah. So I'm sure. Look, we're not going to spoil anything, and we're not going to put Nick on the spot here. But there's been some talk backstage about some futures copy trading with Tradier and a couple other partners. So coming soon.
Okay.
And I want to make sure if there's a few others, let's get to it. But I want to make sure we can get Mike on stage
Yeah.
here soon.
I'm just looking fast, just for things that
Sure.
are pertinent to Nick. I think we're good for now on these. We can answer these at the end as well, Ben and Dylan with me.
Excellent.
Okay.
Yeah, if anyone has any questions, you could always, text me on X, anything. I'm always an open book, so.
Awesome,
Perfect.
man.
Good deal.
Nick,
Thanks, Nick.
thank you so much. Nick Giannati from Bull Trade Finder. Find him on X, find him anywhere. He has been a great partner with great results. So excellent, Nick. Thanks so much for tuning in, man. Lex, unless you have anything else, I think I would love to hand this on over to our next presenter. What do you
Is
think?
that Ben or is that Mike?
I think we're gonna call an audible. We're gonna let Mike go here, and
Sure.
we can have Ben wrap us.
That's good. Then we can take all the questions, the three of us together at the end. That's awesome.
Perfect.
All right,
Listen,
I'm
I'm
jumping
trying.
out. Bring Mike on, and off we go. There he
Awesome.
is.
All right, I'm here. Hey, everybody.
Hey,
Thanks for having me on.
Hey there, Mike.
All right, first time doing this, so if I appear nervous, that's just how it is.
No,
And we'll
Mike,
get through it.
you're crushing it
good.
already. Be yourself.
Yeah.
And, if you want me do you want me to control slides for you, or do you want to pull them up yourself? Completely up to you.
Yeah, go ahead and do the slides here, and I'll kind of go through them one at a time and go through the
Awesome.
bullet points and probably explain a little bit more for each bullet point. So as Dylan has explained, my name's Mike Walker. I founded both 10% per month and 5% per week. I've been trading since 2006, and once I learned about options, I just fell in love with it, and been doing it full time since 2007. Um, and over the years, just like Nick had explained, I had a lot of tough beats. I had some really big gains, and I look at the losses as tuition. And I kind of earned my degree on the streets of Hard Knocks, and just came about finding different strategies that worked with my lifestyle and worked with, I guess, my risk tolerance. So right now, I focus on credit spreads for the S&P 500 index. And as you can see here on my philosophy is I try to keep it simple. I don't want to get too fancy with different types of spreads, more advanced options. And I just kind of keep it simple, and I'll sell spreads and then close them out. And I just kind of let them expire on their own. Um, and all these trades have a defined amount of risk. There's obviously nothing on margin. You're never going to lose more than what you had invested in it. And kind of like Nick, we go with the base hits. We're not trying to get a home run or a grand slam on every single trade. So if you could start the next slide there, Dylan.
Yep.
And same thing, we just keep it simple here. And I don't do a trade every day. I'm kind of picky about it. I'll see how the conditions are, what kind of news events are going on, what kind of data is being expected to be released, and just kind of go by that. Sometimes I'll do 2 trades a week. Mostly it's one a week. Sometimes I'll even sit out. So it really depends on the market conditions. Um,
Yep.
The defined risk, we'll go into that. I have two services I'm talking about is 10% per month and 5% per week. And they're both a little bit different, so I'll address them individually later. Um, so rules based, that's very important. A lot of traders that do end up losing, I myself am a part of this back in the day. I get emotional. I get tied to that trade. I get tied to the money that I'm going to lose, and then I hold on for too long, and it's a lot worse. And of course, nobody likes to lose. So it's one of those moments where you just like have to take that pill and just move on. And there are times where you get out of a trade only to find the market turn around, and you didn't have to get out of the trade. Everything would have been fine. But to me, that's negative reinforcement. You should just get out whenever you reach your exit rules and just keep the emotion out of it, and things will be a lot less stressful that way. And it is a long-term type of goal. We'll just earn a small amount every single time we do a trade, and just keep building up that capital, that account. Now, partnering PeakBot, it's great. Automation. What is it? Alerts are dead. Automate instead. So that
Yep.
just makes it so much easier for the client. They don't have to wait for their alert to come in their inbox, log into their account, get the trade set up, and then hopefully they'll get the same price. Automation eliminates a lot of that delay. Um, and there will be times there's going to be some slippages, as Lex had brought up from one of the questions. It just happens. The market moves so fast sometimes you really cannot control it.
Yep.
But hopefully we'll get in there quickly with the automation, and the trades gets executed quickly, and everyone's in on the same page. All right, next slide. All right, we'll kind of break down the 10% per month strategy here. Again, it's just credit spreads on the SPX, and we do $5 wide strikes. So it requires about $500 for each contract you want to sell. And we try to get a 15-cent credit for the 10% strategy, and that comes out to about 3.1% gain if all goes well. Like I said, we'll try to do one a week. Um, Mainly been focusing on zero DTE, days to expiration. So there's no
Yep.
overnight risk. A lot of the trades we do are just for that particular day. Depending on volatility, market conditions, all that kind of stuff, we might do a 1 or 2 day DTE trade, but for the most part right now, they're all zero.
Gotcha.
We have a high probability of success when we open each trade. We try to look for something that's about 85 to 88%. Just kind of put the odds in our favor, and we just watch that trade the rest of the day until the closing bell, and hopefully everything goes well. We don't have to get out of it, and we'll earn that $15 for each spread.
And Mike, really quick, there's a
Yeah.
question that came in from Greg Meyer. I'll answer it live. For 10
Okay.
ppm specifically, and then when we get to 5 ppw, I guess you can answer this as well. But what's this? Do you have a stop loss on the 10 ppm strategy? And if so, how do you set that?
Um, so we watch the positions, and like I said, we sell them for about 15 cents. And
Yep.
when they get to about 50 to 60 cents, we kind of go into babysit mode.
Okay.
And once that kind of hits like 65, 75, we'll get that trade together and just get out of it. Um,
Nice.
there are some moments where that could be a little bit different. It depends on the market conditions. Um, some of the technical indicators we see, we could sometimes see a rollover or a rally starting to form. And if that's what we want to happen, we'll give it a little bit more time. There have been a few instances where we did do that. Things did reverse and worked out for us. Of course, we're not going to do that right every single time. So then we have to just get out of those trades at that time.
Yep. Excellent. Yeah. Thank you for answering that. And I put some more information on screen here. Sorry if I'm clicking around on you, but feel free to continue and I'll see if there's any more questions that are coming through here.
Right. No, you're fine. So kind of like what Nick was saying earlier, we sell premiums from the far out of the money spreads, and nobody's going to get trades right every single time, but the amount of cushion that we get from those far out of the money spreads gives us a lot of room to let the market run its course. Even if it's against where we want it to go, it's not going to go against it that far. So basically, if we're to sell a put spread and it starts tumbling, we're going to have enough cushion where it won't affect us. And stated earlier, we got $5 strikes. So if we sell it for 15, we get 485, and it's a small amount, but we win a lot of the time. Over 90% is our success rate for each trade, and that amount just keeps building up and building up, and that's basically what you're doing. You know, if you look at our goal of a 3.1% per week, that comes out to over 12% for the month. Um, all of these results are gross returns. We don't include the commissions because that depends on your broker, depends on the commission schedule you have with them. It also depends on the volume of trading. Some of them charge per contract, so that's going to increase your commission fees as well. So all of these are gross returns. Everybody's net return is going to be different, and that's going to be based on their commission fees.
Yeah, and these are awesome, awesome results. I think it's easy to come in here and be humble about it when you've been doing it for as long as you have, Mike. But I mean, when we look at the management here again, like there's a common theme here in the three strategies or four strategies that are being presented tonight, and it's that hey, let's find something that we feel has a high probability of winning. Let's be okay with the premium we're collecting. We don't need to get rich on this one trade. And if things work against us, it's the losses are limited and they're managed. $71 is the average loss here with a 93% win rate. I mean, becomes something where this can be a style in which can be automated, and we're not going to lose sleep over this. Of course, that's why you're here trying to learn a little bit more from all of us as to what's going on under the hood here. But either way, I mean, it's really, really awesome to see these returns here. So I wanted to make sure there wasn't anything that you wanted to cover here on this slide. Otherwise, we'll continue to keep it moving.
Yeah, we can keep moving. That's fine.
Awesome. So yeah, and then I'll hand it right back to you. This was just an example of a real win and a real loss.
Right.
And yeah, I'll hand it back over to you. But before we move back into your other strategy, 5 PPW, we can
Sure.
talk through this and then just show the pricing here.
Okay. Yeah, sounds good. So yeah, here's some real examples of what had happened on a couple of trades. Our goal obviously is to get 15 cents. Sometimes we get better. And sometimes we try to shoot for the 20 cents, but more often than not, we'll go for the 15-cent credit just because we feel like that's a comfortable spot far enough away from the underlying, and it's a good enough return where it's a low stress position, and the likelihood of it profiting or expiring worthless, which is what we want, is very high, and we like that. We like to win. Yeah, there will be losses, and sometimes they go above our limit. Like I talked to, I answered that question earlier about 65.75. Sometimes that market just turns around and just nips you right in the butt, and it hurts, but you got to look past that, get that trade closed out, and just focus on the next one, and don't dwell on the loss. And that's how you stay profitable consistently over time. Again, it's a marathon, not a sprint, and we definitely need to look forward instead of looking back. I mean, we learn from the losses, but sometimes things just happen. Kind of like what Nick was saying earlier. If some politician comes out and says something, or if there's an explosion at some fuel plant or something, things like that, we can't control. It makes the market just kind of have like a knee-jerk reaction. We just have to adjust to it.
100%. And there's actually some questions coming in, which I don't, if you don't mind, Mike, I'll throw them at you.
Okay.
First, I'll take this one and answer it live. Trying to understand, if we join the program, trade info is published. We set the trade in Tradier, and then it's essentially on autopilot for the buy and sell transactions. Yeah, that's exactly what's happening, right? So if you wanted to go with Mike's 10 ppm or 5% per week, you're signing up, you're connecting it to your Tradier account. And as soon as you go in and activate the stock, agree which ones you want to trade and set your budget, your job is completely done. All right. And yes, it will be copied. Whatever is entered will be entered for you, managed out, and closed. So I'll handle that one. Mike, this one's for you specifically. For Mike, if only trading one time a week, how do you determine what day to trade? What do you limit it to one day if you're only trading one day per week? Just curious.
It depends on how the market opens. And like I said, there's no set day of the week. Um, we really have to look at the price action, the sentiment, the volatility, a lot of different factors. We don't just want to jump in just because. I know it's going to be a hard answer to or hard question to answer, but it really
Yeah.
depends on that day's movement for the morning.
Right.
There are times where I look at it and I look at the pricing, and the pricing is just not where I want it. I'll step aside and wait. The next day is might turn out to be better. There really is no definitive answer for that other than it just depends on that day.
100%. Well answered. I gotta stop saying 100% to everything. So I pulled up on screen here just something that's available here. All right, and being tracked for the 10 ppm. You can see the equity curve here, which is very strong. Right, those losses happen, but that is a very strong, consistent curve there, and you can see all the information here with an annualized return and the total return here. I mean, everything is looking really strong and can be fully tracked here. So I just wanted to share with you, everyone, that is available to you. So I want to make sure I get this on screen. There are a couple more questions that are coming in, and why don't we answer those while that's here, Mike? But just so everybody knows, you can start copying this 10 ppm strategy fully automated. Also, for just $99 a month, you'll see that's the theme here tonight. Okay, $99 for the first month. This renews at $135, and you can also head on over to peakbot.com/10ppm99 or scan this QR code on screen. Mike, I'm going to go back to another question from Greg Meyer. 10% per month, been copy trading since 2024. You've been copy trading for a little while, correct? You can answer that.
Did we stop trading for a while? Is that the question?
No, the question was, have you been doing this strategy since 2024? I believe you've been doing it longer, but I want you to make sure you're answering that, not me.
Oh, I see. I see. Okay. So we started in, like I said, '06, '07, and the trades we were doing then were iron condors. Um, Market conditions changed. We had to adjust, and I believe around 2019, 2020 time frame, we just focused solely on credit spreads. Um, and what helped do that was the fact that options expirations used to be only on the third Friday of every month.
Yep.
And then they introduced weeklies, which were every Friday. And then they introduced more, they called them weeklies, but they're now daily. So every single day there's an expiration that we can choose from. So we're not limited on the third Friday, meaning we'd have to, back then, we'd open positions and hold them for 2 to 3 weeks. So now with the daily expirations, we have a lot more flexibility and can be very picky when it comes to opening a trade or sitting it out.
Excellent. Perfect. I'm trying to see if any other questions are coming through for you specifically, Mike, here. If they are, we'll call them out. But yeah, I think that covers it, unless anybody else has anything here. But
Dylan, did you get
I
the
do.
first one? Sorry, I'm interrupting again. Did you get the first one from Sylvain about it's for Mike 10 ppm? You see that first one there?
no, why don't you go for it?
Uh, Mike, if you, I guess he's asking for more online transparency as to where the members of your trading team, name, background, etc., and what is your address. I don't know what that means. I wouldn't give your address out, except in case you give your bank password and your username would be helpful too.
Oh my
I
goodness.
could provide my social as well, passport number.
The first question was harmless. The first question was, is 10 ppm using AI to select the
Right.
trade? That was the first part. Mike, I think it's all you, right?
It is. It's not AI. It's definitely what depends on what is happening on the market for that day. Yeah.
Yep. Excellent.
Yep.
Yeah, that one came in quite a while ago.
Yeah, that was kind of a while ago. The other thing is common with the bot world is in the questions, I mean, is I'll paraphrase this question, but with people all doing the similar thing, does it have a rift on liquidity
Mhm.
with all the followers doing a very similar thing in different sizes that becomes an additive size when the post goes out or the bot goes out?
Yeah, so I'll take this one real quick, and I
Okay.
did see a number of questions. I was going to hold on this
Okay.
let
We can
Mike.
we can hold
Uh,
on it too if you want it,
let's
if you want
let's
to do it.
hold on it for a couple minutes. Let's let Mike get through the rest
Yep.
of his questions, so that way I could properly answer the
Okay.
liquidity concerns.
I'm looking quickly to see if there's any more from Mike specifically. Do you guys see any? There's a lot
Uh,
of it's kind of more brokerage type questions. I'll take care of those later too.
okay. Yeah, we'll have
Um,
a recording for this. It'll be
yep,
sent out on our YouTube, and
we'll do the
some
same.
people are-
Good.
Yep,
Okay. What else? And there's one about $99 a month that you guys can take care of that later.
yep.
Mhm.
Yes, replay. This will be recorded, so you can take care of that. Good.
Paying per strategy.
Yeah, what's
Yes,
the
it depends.
subscription price per strategy? What's the answer to that one?
Yeah, so it depends upon the partner, right? Everybody kind of does it differently, right? So Mike, and he's talked about one of his products here. He's going to talk about his other. Those are separate subscriptions because they are separate strategies. Other partners will bundle certain strategies. Other partners only have one. So it really just varies. But yes, you will pay per, you know, system, if you will.
Okay.
Um, Mike, I'm going to hand it back over to you, and you can kind of shift right back into your 5% per week strategy, which I think naturally lends itself, kind of speaks for itself, right? Maybe a slightly more aggressive strategy, going for a little bit of a higher premium. Why don't you take it away?
Right. All right. So yeah, it's the same index, um, but obviously, as the name implies, it's about twice as much of a return. The risk reward ratio is higher. It's the same index, same $5 wide strikes, but instead of a 15-cent credit, we're going for a 25-cent credit. So if this expires, which we want them all to, it expires for 5.26%. And over the course of a month, that could be over 20%. Now, because they are higher in the credit, it means they're a little bit closer to the underlying. And because of that, there's a little bit more risk involved. So I would say the frequency of losses are higher, but the gains in the wins overall offset that. So the difference mainly between 5% per week and 10% per month are the risk tolerance of the individual. If they are okay with more losses in frequency, then that's fine. If they're a little bit more conservative, they don't like to see the losses take place at all, then 10% would probably be more fitting for them. It really depends on the individual. Um, let's go to that next slide there, if you could, for me,
Sure.
Dylan.
Yep. And you may.
So these are pretty similar to 10% as far as the breakdown, other than just the fact that things will be a little bit more risky. But people love that. If I've not heard of an option trader just be bored, because they want the high octane, fun, fast trading, that kind of stuff. So 5% would kind of lend more to that. There is a little bit more activity as far as watching the market for those those particular spreads because it does start a little bit closer to the underlying. Then of course, if things go our way, we don't have to do anything, and that's even better, right? I don't think I mentioned this, but for both of the services, there's no need to close out a spread if everything goes according to plan. We just let them expire. There's no need to submit an exit trade, so it cuts the commission cost in half, essentially.
It's awesome.
And let's go to that next slide. And here are some examples over about past 2 years of our returns. So the win rate is still pretty high. It's not as high as 10%. That's what I'm talking about. There's more frequency in the possibility of losses, but the wins are more consistent and they'll add up quicker over time. I know some people like to compound their wins. I'm not in that camp. I prefer to just pocket your winnings every single trade. Sure, the account will grow faster if you compound it, but if you do that and then we get a losing trade, you're losing more than you would have if you just stuck with a fixed dollar amount over time. But again, that's personal preference. If you're more of a risk taker, compound it, go for it. If you're not, then that's up to you too. And it's both options are totally fine. It just depends on the individual.
Yeah, and I had the historical results here as well for 5 PPW on the screen. Just another look at this equity curve. Although you are slightly more aggressive and your risk tolerance might be tuned up a little bit higher, you can see arguably even a tighter curve here, right? With just some awesome data. So, and I don't even believe this is fully up to date. There's probably a couple trades at the top that still need to be filled in. So, but yeah, these are updated very frequently, and these are some incredible returns here. So, sorry, I'll kick it back to you. I just want to make sure everybody knows that they can track the individual trades here as well. So, look, you're shooting for an extra $10, right, in premium, while your average loss is still almost identical to your other strategy, right? And Mike,
Yeah.
we found this with our own bots. Hey, we love our sweet spot, and we're in our sweet spot for long enough, and we realize, well, I wonder how much more can be gotten out of this while still keeping the risk relatively low and the win rate relatively high. It's a great dance that you're doing here with two strategies. I'll kick it back to you here for just again some examples of wins and losses, and anything else, please, that you'd like to
Hey,
cover
quick question. I'm going to butt in here because I think it would be great if Mike answered this question.
Sure.
Harry Brubaker asks, what are your rules for selecting your strikes?
There's a few things I look at. Not obviously, I'm not going to give away the secret sauce here, but I do factor in a lot of things like volatility, expected news releases, um, market sentiment, um, and I look at the trends. Even though I do trades that expire that same day, I do look at the market that to see if there's any trends that are starting to happen or starting to fade away. That'll give me a better idea as far as where the market might move in the next day or two. And obviously, that's important because we just want to be in it for that one day. Um, Sometimes there's like a knee-jerk reaction, and the market just takes a tumble or just goes through the roof, and we want to take advantage of that. So again, it depends on that day, how things are trading, and then we just kind of just go in it at that point. There's probably no easy way to answer that. It's not like, oh, if it hits this level or at this particular time of the day or whatever, we'll get in. It really depends on the day.
excellent, very helpful. Ben, were there any other questions that came in that we wanted to have Mike hit on this for right now? I see the question of so each unit is a 5K investment. If I have a PeakBot account with a different service, can I add mics in a separate funding? More so on the 25. I'm not completely clear on that from this anonymous attendee. But yeah, I mean, we kind of had it stated here earlier for cash needed for each of these, right? So capital needed, Mike, per unit to trade one full unit of your strategy is going to be the $500. So as long as you have that and the options level available in your account, you're going to be able to clear the trade. Correct. I mean, that's how we would, I think, answer that question. All right. So anything else? Obviously, you can see the results here. Anything else on 5PPW, Mike? I know we're close to time, if not at time here. So I want to make sure people can get your pricing promotion for 5PPW. So obviously, you can see on screen here. This is a special promo price at $199 for the first month. It renews at $249. You get what you pay for here. All right. You guys saw the returns. There's a reason why it's a little bit more than the other strategy. All right. Because the returns are with it. So head on over to peakbot.com/5ppw199, or even easier, just pull out your phone and scan this QR code and it'll take you right to the checkout page. And if you have any questions while checking out, before you check out, if you want to visit more information, there's going to be a little chat button in the bottom corner of your screen, whether you're on a phone or your computer. Use that chat button, message our team. We'll be able to respond live with any questions that you may have for us and or our partners. Mike, I'm going to keep this on screen here, but anything else that you'd like to add here to people still watching, and anything that you'd like to leave them with other than please automate?
Just want to thank everybody for coming on here. I'm happy to talk about our services, having everything automated. I think it's great that people are inquiring about different ways to invest and make their money work for them. And it's just good to get everybody together and have this webinar. It's my first one. That probably won't be my last now, honestly.
Oh, you're coming back. Here's the news. If you continue to keep up these results, and we're open to saying this, Mike's one of our newer partners, so we're very excited for our future together. So yeah, you'll be back as long as these results keep up, and you've got 20 years of results behind you. So yeah,
Sounds
awesome,
good.
Mike. Thanks for joining us. If there's more questions that come in specifically for for Mike, we will try to get those answered for you. Maybe Mike will hang around, maybe not. No worries. But thanks again for coming in and coming on, Mike, co-founder of 10% per month and 5% per week. Appreciate it, man.
No sweat. I'll stick around.
Thanks a lot, Mike.
Excellent. Thanks so much. Ben, I am going to kick it to you, but Lex, anything we can be hitting on a little jam session between here, or we keep things moving? What do you think?
I think we keep moving. I saw there were some questions that were brokerage related. I think Ben or you like nixed them, which is good, because you know what my team says: don't answer brokerage questions because you're not registered. I'm like, yeah, but I know the answer, so can I just answer them anyway?
Yeah,
There's
I
a
get it.
PDT question on pattern day trading, which I love because that's a hot button issue for me. Yada yada. Great stuff so far, guys. I love it. Very informative. I think people are getting a lot out of it. A lot of questions. Great feedback. So all things are going
Yeah.
good. Survey looks good as well. So
Excellent.
good stuff. Good stuff.
All right. Happy to hear
Fantastic.
that.
Keep rolling.
So let's keep rolling here. We're going to hop into the BenBot. I'm going to fly through these slides just for the sake of time here. Glad to give Nick and Mike the spotlight for a little bit longer. Now, before we get into the BenBot, which is half man, half machine, copy trading me, I wanted to address some of the comments coming in about liquidity. There's comments of, as more users join the copy trading programs, how does the system handle increased trade volume to prevent liquidity issues and excessive slippage? Well, there's a number of ways that we will do that. And by the way, Dillon, I could have the slides up when
No problem.
when I'm ready to roll. So there is a cap on the amount of subscribers and the amount of units, we'll call it units, contracts that can be copy traded, right? So we are constantly watching for slippage every day, and if we and every partner is going to be different, right? Partners are going to trade different deltas. Some are going to be further out of the money and have less liquidity. Some are going to trade closer to the money, have more liquidity. Some are going to trade further day expirations, so on and so forth, right? So we're constantly watching all of that. We're looking out for different factors that could impact slippage, and then we're putting a cap on the number of contracts. Now, we're debating internally on whether we make that cap public or not. However, we are watching for every partner, and when there are liquidity issues, when we do get close to that cap, we cut off subscriptions, so that no more people could subscribe, and hopefully liquidity can be any issues can be contained. Now, in the case of, let's say the lead trader places an order and it's on a contract that does not have a lot of liquidity, or less than average, call it, right? Well, we have rules in place where our system, PeakBot system, will automatically work your order in effort to obtain the same price that the lead trader got on that trade, right? So if you're buying, we're going to send out that order at a price that's similar to, maybe a couple pennies even higher than what the lead trader filled at. And the system is going to continue to adjust by a couple of pennies every 15 seconds or so, until that order fills. There is a cap on how much we will adjust, right? Because if price just runs away, we don't want to just continue to adjust and get you into a completely different trade. So there's a case that you might miss a trade because of liquidity, right? Now on exits, different story, right? We're not going to leave you hanging in a position. So that order is going to keep adjusting until you get a close. In terms of major problems we've seen from liquidity, there haven't been too major of problems. I mean, there are some partners that will trade. There's one coming to mind. They'll trade a SPY contract, and the followers might fill at 5 cents difference at some times. I think the biggest gap we saw was a 7-cent difference. So needless to say, we're monitoring that partner and potentially capping them or reducing the cap of contracts that can be traded with that partner or copied with that partner. So I don't know, Dillon, is there anything else that you think should be addressed for slippage, liquidity?
Not for slippage and liquidity. We're careful about it. We're aware of it. Orders will be worked to the point where they just won't be filled. And if that's the worst case scenario and you're not filled on an illiquid options chain, it's not a terrible thing. Most of our partners are staying away from that issue completely. So great answer. And I think that covers it.
Awesome. All right, let's keep going here. I will keep the Q&A panel pulled up. If you guys do have questions, feel free to ask. Maybe Dillon, you can
I got it.
Be in the background answering these things. So you can see my screen, right?
Yes.
All right. We are going to cover the BenBot. Like I said, I'm going to try to fly through these slides so we can all get out of here. But quick plug, you'll notice the title on the screen called The Bot Shop. Dillon and I do host a show on Tradier every Monday morning, 8:30 a.m. Eastern, and every Friday afternoon at 12 p.m. Eastern, where we dive deep into our strategies. We did cover the BenBot several weeks ago. However, there have been changes to the BenBot that have taken place since then, which we'll cover now. But make sure you tune in. We are currently covering our vertical wheel strategy, going into all of the detail behind that and how you can use that effectively in your account. So let's dive into BenBot. We're going to go through intro, results, indicators that we use, sizing, and profit targets. So just some quick stats here. Since the beginning of the year, we've taken 38 trades. I should really say traded 38 days, won 27 of those days. So that's a win rate of 71%. There's a unit limit of 4 here. So if we're talking about liquidity issues, this is part of the solve for making sure there is enough liquidity to go around. You can only trade 4 times the BenBot results. And if you did that since the beginning of this year, you'd be up $1,200 on the roughly $10,000 of cash you need. You do need about $2,500 of cash per unit. So that's about a 12% return year to date over 2 months. Not too bad if I don't say so myself. This strategy trades IWM. Why IWM? Well, it's more affordable than SPY or QQQ, right? That it kind of allows us to play with a $2,500 budget per unit a little bit more efficiently than SPY or Qs would. Another reason why we like it is a mean reverting instrument. What I mean by that is there's no single stock that's going to dominate the ETF. So it will kind of revert back to the mean versus trending hard in one direction, especially on those earnings report days. We can see that one particular ticker, one particular company within that ETF could have an overwhelming impact on the overall direction that price is moving. And it moves enough, right? Our target, which we'll get into when we talk about profit targets, we're targeting about $25 to $50 in profit per contract. So we really only need, and we're trading at the money, so we really only need the underlying to move about $1 in our favor. We'll get more into that. And it allows a lot of our users to diversify, right? Everybody's trading SPY, everybody's trading SPX, everybody's trading QQQ. Not too many people are trading IWM. So we want to add that layer of diversity to your portfolio. Of course, your choice if you want to trade it or not, but this strategy is automating IWM. So there's a lot that goes on behind the scenes. I'm actually going to show you a free indicator that you can use on TradingView, which I will continuously make updates to. I actually just released it this week, maybe last week. But anyways, so simply put, we like to tout this as the safest strategy on PeakBot. It has the lowest drawdown, and it has had the lowest drawdown for over a year now, just a drawdown of 7%. Very, very short-term exposure, no overnight exposure. You only need $2,500 per unit. However, this strategy day trades. So you do need, until the SEC approves this rule for new PDT rules, you do need $25,000 in your account to be able to trade this strategy. But you only need to use $2,500 of it for per unit. It could trade bullish. It could trade bearish. We'll get into what both of those look like, and this is available on Tradier only. So if you don't have a Tradier account, you can get set up on peakbot.com/Tradier. Don't have access to put that in the chat, but maybe somebody here does. peakbot.com/Tradier. And then the data that we're looking at when making these trades, and I'll pull up a chart and we'll go through all of it as quickly as we can here without getting too into the weeds. But we're looking at volume, we're looking at volume profile, we're looking at ADX, DMI, and opening range. You can see all of the BenBot results, and maybe I'll pull it up here in a second at pkbt.app/BB results. Fun fact, BenBot trades almost every single day, which is not like PeakBot's other strategies that will take many days off. So here are the data points. We've got volume profile, we have ADX, which I'll spend some time on in a minute, DMI, the directional movement index, and the opening range. All of these factor into trading decisions. However, just because we get an indicator popping up on our screen, that does not always mean that we are going to take the trade. So I'm going to switch over to my trading view screen. There's a lot going on here, so let's go through these one by one, right? So first, we're going to look at volume. That's going to be right here. Volume is going to show us the total shares traded within a period. I trade 5-minute bars. This indicator here, which you can use for free. You can type in BenBot entry alert into TradingView and then get this on your account for free. You can see exactly what I'm seeing. It's designed to work on IWM on a 5-minute chart. So first thing is volume. We like to look at volume as a confirmation of a move. That's really how we use it. It doesn't factor into the indicator, but as we are manually trading, we do like to take a look at that. Now, volume profile, I haven't turned it off. I have it turned off right now because it does get kind of messy, but I do trade with volume profile on because I like to see where the majority of shares are being traded at, what price, right? So this will plot the price levels on your screen so you can see where support and resistance kind of are at that moment, right? And this will change depending on what you have on screen. So if I change the time frame that I've got on screen, you can see that these bars are changing over here. I'm going to turn that off for now, just because it does get a little bit messy. We've got ADX and DMI, and that's this graph down here. The black bar is ADX. So as that increases, that's signaling an increase in trend strength. If you wanted some metrics, we can say that below 20, ADX below 20 is not really in a strong trend. It's kind of within a range. Above 25 is in a strong trend, and then above 50 is in a really strong trend. So we're kind of approaching those levels as of late. This is a trade a couple of days ago. It was a really nice alert a couple of days in a row, which we'll cover. And then DMI. So the green line here and the red line here are the positive and the negative. So the green line will indicate an increase in trend up, and the red line will indicate a increase in a trend down. So when the red line is increasing, that means that the trend down is increasing. And then we also use opening range. We'll mark when there's an opening range breakout. It's 30 minutes into the market is when we'll mark the high and the low of those first 30 minutes. And then we'll watch for a 5-minute bar break above or below and potentially place orders as such. And we can see here, this was a nice entry. So our DMI criteria triggered here saying, hey, maybe we want to buy a put. And it would have been a good idea to buy a put because we dropped all the way from about 264 down to 258. Geez, 264 to 258 at its lowest. That was about a $6 drop. Probably would have taken profit a little bit further up the line here because again, we're looking for 25 to 50 cents. If that move is strong, we'll let it ride. And then if we move along here, we got another nice DMI entry on this bar here. Get in at about 261.50. Could ride that up all the way to 264-ish. We did get an orb call, but did not take that because we were already in a position. Now, when it does come time to enter, we are looking at all of these different factors to make a decision. Sometimes we will decide not to trade, and I'll show today because today was a non-trade just based on the crazy gap down that we saw. So we did get an orb put. So basically the indicator was saying, hey, we're going to trade a put on the close of this bar. We were already down a lot. I forget exactly what percent we were down at this time, and decided to not take the trade, right? And good thing we didn't buy a put because, man, we just kind of went up from there. So that at a high level is the different factors. If you want to learn more, again, make sure you tune into our show. Monday mornings, we cover all of these things in detail. So let's talk about sizing real quick. The maximum amount we are risking, even though we're setting aside $2,500, and that's, as we can see in the middle, the budget per unit here, the max we're risking every day is only $200, right? We don't want to put too much of our cash reserve into this trade because we don't want our drawdowns to be unmanageable, right? So we're mostly playing single leg. We're buying options here, mostly buying options. Sometimes we will sell credit spreads, and that's mostly to offset the cost of buying an option if we're really, really confident in trend direction and we want to kind of double down on that and kind of discount the cost of our long plays there. But there will never be more than $200 at risk in a single day. That is a change that we've made from the old version of BenBot where there was a lot more at risk. It was more of a covered call type strategy. It took a couple of big losing days for us to decide that we wanted to make a change for that. Quickly, we've got a question. Which indicator am I showing? The orb put. So I'll just flip back over to Trading View real quick. So this indicator is the BenBot alert entry. So you can go ahead and just type that.
Entry alert.
Oh, yeah. Entry alert. Man, maybe I should rename that. Thanks, Dillon.
You got it.
You could go to Trading View, type that in. It's free. Put it on your account. And like I said, it's meant for IWM and it's meant for 5-minute bars. That's how I have it configured. Back to the slides. $2,500. So we're trading with just $200. Why would we say we need $2,500? Well, that's to absorb those drawdowns. It's the cushion to keep us in the game, even when we go through losing periods. And as we saw, BenBot has the lowest drawdown of all of our bots. The maximum drawdown that it's seen has been 7%. That's because we are smart about our sizing. And then, of course, the unit limit is 4 units maximum per follower. So you could trade up to 4 times what I'm trading every day. I do like to keep my positions small. So again, if I'm trading with $200, you're going to be trading with $800. That means a total of $10,000 is budgeted, so on and so forth. Our profit targets. So I mentioned before, we're looking for a $50 gain, call it, every day. And if we don't hit 50 in the first trade, maybe we'll take another trade, maybe not. But we are looking for that $50 gain, which means if we're buying at the money, let's say we're buying at the money, that means delta is 50. That means that we need roughly a $1 move in IWM in our direction to gain that 50 cents that we're looking for on that contract. Now, theta decay does come in because we are trading 0 DTEs. So we need that move to happen relatively quick, which sometimes means we're not going to get that full $50 gain. We might cut out a little bit earlier if we're in a trade for a while. But most of these trades are entered early. We'll give it 20, 30 minutes to play out. If it doesn't play out, we'll kind of take what we've got on the table, take a smaller win, maybe even cut a loss, and then get into another trade a little bit later on for a cheaper price. But the average daily range on IWM is $5, right? So on average, IWM is moving $5 per day, and we only need $1 to profit and hit our profit target that we want. So relatively conservative, in my opinion. Obviously, make your own judgment on that, but we are looking to gain that 50 cents, 25 to 50 cents per day. And in fact, all of February, our average win per trade was $43. So we were pretty close to hitting our goal because we're not going to win every day. We won 15 out of 19 days. Usually this is trading 20 days per month. February, of course, is a shorter month. Didn't get the full 20 days in. We got 19 in. But the total profit per unit since February is $336. That's about a 13.4% return in February on the $2,500 that we needed budgeted. So I can pull up results. This is that essentially covers the BenBot. I'm happy to answer questions about it. Like I said, I was going to fly through those slides. I could pull the charts back up. I'm happy to really address anything. Dillon, anything off of the top of your head that you think the good people should know?
Man, well, yeah, it's more macro about this entire thing and the trend of making sure that if you're going to be automating, that you're doing it appropriately and with partners that you can trust, which hopefully you've learned that here tonight. But no, I mean, Ben, with BenBot, launched the initial strategy in March of this year, I believe, and you've made the adaptations. Last year rather. So we're coming up on a full year of results now. Again, it's lived a few lives, as most of our bots have. If you're not updating your strategy to match market conditions, you're just going to get beat. And these are the bots that you see are out there that were built 5 or 10 years ago, and they're still trying to sell you the same thing. It just doesn't work. There's a reason why automated alerts and copy trading makes sense. Even custom algorithms, Ben, half man, half machine here, they're tough to build. And we've done a good job of that. But we're here saying, look, find traders you trust who got great results and understand their system, and then automate. BenBot's a great example of that. I love the new approach. I love how much more cash efficient it is. Fishing for that $50 a day. This is the staple. I tell people who've got enough cash, if you're coming into an automated portfolio, if you got, the amount of cash to day trade, call it 25K, running 1 unit of this, 2 units of this, not financial advice, not financial advisors, great core of a portfolio. This and, other strategies.
And to further expound on that comment you made, being cash efficient, previously BenBot required $25,000 because we were buying 100 shares and we were selling a call and we were buying protective puts, so on and so forth. Now, over the course of the year, we did return 14.3%, but of course it's not cash efficient like it is now. And we did get days where we had some bigger losses, like we had a $300 loss, a $350 loss. There's a $750 loss on October 10th. Man, was that that date sounds familiar. That date sounds like it was the day that President Trump announced 100% tariffs on China.
Yeah, it was exactly right.
I remember that day.
10:30 a.m.
Yeah, there you go. We could go look at a chart and just see it go.
Yeah.
So we did make some adaptations. As Dillon mentioned, we cut down on the overall size of our positions, the overall potential losses. And this is what we've been looking at over the past month. And I'm not going to lie, I really, really like this strategy. Um, Only need $2,500 now instead of $25,000. And I mean, you still need that to day trade,
Day trade.
but you're not going to be using that total amount in your account.
Correct. No, I mean, I honestly, I think that covers it. Let's give the people their promotional pricing, unless you have anything else on how they can get started with BenBot and all of our other automated strategies. And then I'd love to know what Lex has.
That's true. It's a good point. With this promotion here, you will get access to all of PeakBot's bots, not just the BenBot.
Yep, absolutely. So Ben, I guess I'll say it. $99. Okay, the theme here. So PeakBot's automated strategies for access to all of our bots is normally $199 a month. You're getting access for $99 for the first month. Head on over to peakbot.com/benbot99 or click on the damn QR code with your phone. That's easy enough. You can do that, bring you right to checkout. And if you have any questions or want more info, as I stated earlier, just open up a chat with our team. 7-day-a-week customer support. We didn't hit this. All right. For us and all of our partners, PeakBot handles the customer support. Live US agents. Our team is here answering your questions, comments, and concerns. And you won't have any questions or comments when the bots and these strategies are performing. We know that, right, Ben? Right? Like nobody's got question when everybody's making money. They don't care how it's being made. They only come to us when we see a loss. And do so. We encourage you to do that. We want you to know why the bot lost so you can continue to stay in the game and have the confidence to do so. Lex, what do you think about all this, man?
Dude, you know what? I'm the biggest fan because I've moved from, as you know, from the pro side of the business to the retail side of the business. And the retail side of the business is way harder. But when you have a service like you guys offer, a bot service like you offer, I love the fact that it takes emotion out of the equation. And that is the bane of the retail trader. Second guessing, emotion, hope, all bad things, unfortunately, when it comes to trading, not when it comes to worshiping, but when it comes to trading. So you guys take a lot of that out of there. And I think it's fantastic. I love it. I love it. I love it. So I highly recommend to the folks that they give you guys a shot. I know they will like it. And it is just fantastic. So, and I'm sure you guys are always iterating and coming up with new bots, right? Is that how this is? Yeah.
New partners, new bots. Right now, we automate for about 15 different trading companies and communities, 2 of which you saw tonight. And, I think this went pretty well tonight. Maybe we'll be back for another one of these with some new trading partners. But yeah, PeakBot's always coming up with new strategies. You have to, Lex. You know this. You're a professional trader yourself. It's if you're not adapting, you're going to die, right? So constantly staying up with things and sniffing what's coming, getting smart about your entry criteria. And more than anything, what we've learned from us and our partners is sometimes the best trade is no trade.
Yep.
Especially lately with the volatility in the market and the world. Lex, I want to take this opportunity to thank you and the whole team at Tradier for having us and taking an AskLex and dedicating it to the fact that alerts are dead, people. It's true. All right. The fact is your alerts are great, but your results aren't. So let's cut the middleman. Let's get automated and do it the right way with PeakBot or one of our professional partners. You can head on over to peakbot.com/bot shop. There's a dash in between bot and shop. That's Ben's fault. Okay, but
I put the dash there. He's right.
It does look better and it helps him sleep at night. When people type in bot shop with no dash and end up there, I lose sleep over that too. But anyway, peakbot.com/bot shop with the damn dash. That'll show you all of our partners, all right, and everything we're doing and automating for different pro traders. If you want to learn more about us, well, come on over right here.
Perfect.
Anything else, guys? Otherwise, I think we can wrap things up and let people on with their night.
Yeah. A couple quick announcements from me from the Tradier side. First things first, we do these AskLex series almost once a month, I'd say. And we'll have a variety of folks on from time to time. We'll be talking all kinds of different things. So make sure you check your email or at least subscribe to our hub, which is hub.tradier.com. I think we can see you two cats regularly on the hub. Is that right?
Oh yeah.
Oh yeah.
Twice a week.
Give us that time right now. So what day is that?
So next one will be Friday. So we're live Fridays at noon Eastern and Mondays at 8:30 a.m. Eastern.
Okay, great. So you can find Ben and Dillon on their show on the hub. And the great thing about signing up and subscribing, it's free, first of all. So that's easy. Second thing is we do a lot of these kind of things, and there's a new event coming. It's called the Tradier Live Summit in Palm Beach, Florida. And I just want to make a quick announcement before we disappear here. That's happening in early May. We just got the approval today that is going to go on.
Nice.
Budget's all falling into place. I think these two guys are going to be there. I'm pretty sure. I certainly will be there. So you can meet us all, and we're going to have a whole lineup of folks, some from SIBO, some from the industry. It's going to be a full day of fun. Going to be awesome. So you don't get that info if you don't subscribe to hub.tradier.com, and so much more to come. So anyway, that's my plug. You guys did a great job, as did Mike and Nick. So thanks for coming on. It was awesome. What else, guys? Any happy trading comments? Nothing? We're good?
No, I mean, hey, careful out there this week. Is this recorded? Yes, this will be posted on, I believe, Tradier's YouTube. We'll make sure we get the copy and post it on our socials as well. Thank you so much for everybody who joined and stayed with us. Great audience tonight. A lot of questions. And again, a shout out to Mike Walker and Nick for presenting tonight. Thanks so much, and we'll see you at the peak.
Yep. Happy trading, everyone. Guys, take care. We'll talk later.
See you, everybody.
Take
Bye,
care.
everybody.